Alrighty. Doc here from North America. Good morning, good afternoon, and good evening somewhere. Let's see what we got going today. We got a European interest rate cut coming in 43 minutes in the middle of the, or towards the end of the webinar, so that's cool. We always like live action. It's better than anything else. Definitely. Live action is where it's at. You can see up on the screen we have the dollar index this morning. Starting off with that, you see, make it bigger right there. You see it's been gaining value. Pairs trades are losing value against the dollar generally. I guess, excuse me, that's part of the neat game plan of it all, always as a trader, trying to understand which one is outperforming the rest. What is the best of the best? Be it going down or going up, either way. What's the best of the best? There are two ways to make money in the market. That is buy low and sell high. Everybody gets that idea. And then there's the other side of that. Sell it short and buy it cheaper. And they're the two ways to make money in a market. And then obviously there is three positions. There's long, there's short, and neutral. Three positions. Sometimes you should be long, sometimes you should be short, and then sometimes you should be neutral. So that's literally, we could start the title of today's webinar that way. Seems to make sense to me. So that is how we start off looking at the market today. In this case here, our math keeps on screaming at us that last 3 days is saying that there's strength on the short-term day-to-day right there through the algorithm and the green dots on that bar chart. And then at the same time, let's hit this exit, our weekly is telling us that bounce is not the best of bounces. It's telling us for the last week and now this week that the market really is in a neutral stance, because the weekly is in a sell for going on a second week, and the daily is pointing up for 3 days. So what we get out of that is a hedge. Our math is telling us that right now, be neutral. So in other words, at the moment, on a day-to-day basis, be neutral. On a week-to-week basis, overall, it's telling us that the bigger trend, the stronger trend, is down. I like that. It's a nice way of looking at it. So what we'll do is we'll say hi on the chat line. Let's do that. There we go. Right there. There's the chat line. And we'll say hi. Can I say hi there? Yeah. Whoop. Not that. No, we don't want that. Where's the chat line? Where can I chat? Am I signed in? Let's see. Make sure we're signed in. Right there. Let's see if we can do this. Hi. It's like we can't even get into the chat line. There's the chat line. Oh, there it is right there. Okay. So we go, hi. Good morning. There we are. It's like a scientific project here. And we are looking at the three positions. That's right. Long, short, and neutral. There we are. Notational? No. Neutral. See if that'll do it. Nectarine. No, we want neutral. I hate this where the computer tries to think for me. New. Let's try it one more time to get that word correctly in there. Neutral. Neutral, neutral, neutral. Neutral. Unique formula. No, we don't want a unique formula. Meaning. How about this? There we go. Neutral. The search engines love to torture us. I think that's what it really comes down to. Neutral. Bingo. There we are. Long, short, or neutral. There we are. So, and we're also looking at two ways to make money or a win. Long or short. There we are. So bingo, bango, bongo. We've got it. That's our title. That's what we're looking at today. And in this case here, you see the weekly. It's 2 weeks in a sell. At the same time, we see here, market was going down on the short term and then started to move into the upside. So it's putting us into that neutral state at the moment. Well, there we go. I like that. Just a simplistic way of looking at the markets. Sometimes we really try to make these things way more complicated than necessary. I think that's what terrifies people from using the option derivatives, or a lot of times in DocDow to refer to it as binaries. What it is, you are limiting your risk. You're increasing your potential to gain or make money. And so a lot of people run away from the options market, to have that conversation or understand the concept itself. And that's what the option derivatives or binaries do. They open the doorway so you to be long, short, or neutral. And you can be, there's great potential always to be limited risk with unlimited gain. Ta-da! Interesting, eh? That is the removing of the zero-sum factor. There we are. I figure if no one's typing on the chat line, I might as well type on the chat line. There we go. I think that's cool. All right. So in this case here, since the weekly is not going in the same direction as the daily, the bar chart shows us to be neutral. There we go. All right. So from there, we go into the magic of what makes currencies move. And obviously, it's economic data. What's that other word I was looking for? Not only economic data, but policy data. And you say, policy? What's policy? That's what our fearless leaders are creating, setting laws and and restrictions and opportunities. Policy. Yes, they make a policy, and they're supposed to vote on that policy. They're supposed to be sensitive to the population's desires, and they set up these rules or regulations, in our political structure, and that is the economic policy that will control the direction of different products. And so let's take a look at, and we've been discussing this, we've been looking at the bond market, had the interest rates. So let's put the interest rates up there on the screen and show you how they react. Just like we know, the dollar index has been gaining for the last 3 days against the currency pairs. So let's take a look at the 10-year bond. And what has that been doing? Going down for the last 4 days. See that? So when a bond, let's just put that up on the screen even more louder since they're so much more ahead than the policy makers, you can see that the market itself is basically the real deal. You see here it's been going down for 3 days. When a bond price, this is the bond price right here we're looking at. This is the bond price right there. So when the price of the bond is going down, obviously it's losing money, or in other words, it's not as valuable. Let's put it that way. It's just not as valuable. Depends on your position if it's losing money or making it. But it's going down in value. That means interest rates are rising. They're going up. Costs you more. That's right. Interest rates are going up when bond prices are going down. And when bond prices are going up, interest rates are going down. That does the opposite side of it. So in the last 3 days, or in this case here, the last 4 days, bond prices have been going down and interest rates have been rising. And so when interest rates are rising here, what we see is, ding, 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 ding. Let's go back to it again. Bingo, bango, bongo. We see the dollar index going up in price. Now, you could be long it or short it. If you're long it, you're really happy and you're making money from it. And if you're short it, you're losing money. And if you're in neutral, you are not taking the pain or the risk. And so it depends on your, as they would call it, gamma or your delta, your position basically. Gamma is basically your position. It tells us that right there, you can see it. Now you can see it was rising on the 4th day and the 5th day too, but it was red dotted, and our algorithm was showing us. Let's show you the algorithm and its action. You see our algorithm was rising over the last 5 days also. You can see the green line reaching up and going through the manifold here, or the standard deviation right there. And it's like an oversold thing. When it gets down below it and starts to lift up through it, it's telling us that it's going to see strength. In this case here, we saw that very comfortably. You can see here where it got through the plus side and started to fail as it dropped down. Down, 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 down. Boom. And there is our action to the dollar. Why the dollar is strong and why other currency pairs are weak. And let's throw that up on the screen. Let's see. Let's do that. Where are we going here? Right there. Let's open it up and put it up on the screen. Let's take a look at the euro this morning and see what the euro against the dollar is doing. Indeed, indeed. There we go. We'll put that up on the screen as it loads. Obamacare is getting chairmen of companies killed, it sounds like. That's what's going on in the medical insurance industry here in the United States. Obamacare is getting people killed. People want to shoot the chairman of insurance companies just because Mr. Obama created Obamacare, and they don't like it. I'm not sure if they understand who has incorporated this thing. Mr. Trump got rid of most of it, but he couldn't get rid of all of it. and then they pretend that more people are insured than ever, which is not true. Especially when they're trying to shoot the chairman. If they are more insured, it's obviously the wrong way, that's for sure. All right, there is the euro. Let's put it up on the screen now. There we go, because I was just looking at the headline as we were saying that. And there's the euro. You can see the euro has been moving down for, you see it, let's say, let's widen this a little bit more. You see here, peaked out 4 days back, actually 5 days back. You see right there, it was closed a little bit below that day right there. So you can see the slow direction down. At the same time, you can see our weekly trend has been going on for a while. And that's why we have the spreadsheet up on the screen. Because right there, the euro highlighted is 11 weeks now in a weekly sell and 2 days in a daily sell. So in other words, the last couple days, you could be short the raw product and be relatively consistent on the right side of the market. That's what the answer is there. And then, what we get from there is, obviously interest rates are rising here in the States, and then they're going to be going down in Europa, especially in another another 28 minutes. More than likely, they will probably drop the interest rate again in Europe, especially when we have big number coming out, PPI, in 42 minutes. So we have the PPI, the Producer Price Index, coming out, just like yesterday we had the CPI come out, where inflation is rising again. It's rising more. Now, Mr. Powell's favorite, talk about incompetency, Mr. Powell's favorite statistic is now up to 4.3 in inflation. But he says the official BLS indicator, Bureau of Labor Statistics, is only at 2.7. But the one he follows has moved from in the high 2s, low 3s to the mid 4s now. So inflation is climbing. He's lowering interest rates when he shouldn't, because policies are against growth. Is this an adventure to follow? So the government policies are against growth. Mr. Trump's policies are for growth. And so what we have right now is we have interest rates trying to rise, which means it's costing you more to borrow money or buy products because the cost of them are increasing and they're producing less of them, which creates inflation. Yeah, for you out there who believe in what's it called, Keynesian, or is it? I'm trying to think of his full name. It was an economist who was a socialist back in Keynesian, back in the turn of the last century. And let's see, Keynesian. Let's see if we can do this. Put that in there. Get his first name. Because this way you can. Keynesian economics. Maynard. That's it. His first name was Maynard, like in Maynard G. Krebs. So Maynard Keynesian. Keynesian. Let's see if we can do this. So we'll get this spelled right. We can put that in there. He was a socialist. Maynard. Let's see if we can get there. Maynard Keynes. Keynes, that's it. And we're going to put that in there. 1863 to 1946 was a British economist who developed the economic theory of Keynesianism, which is the government should intervene to help the economy recover from recessions. Yeah, they've done that real well, haven't they? All we see is inflation from it. Let's see, Maynard Keynes, economic theory, and we are we believe that Maynard Keynes is just another daydream of socialism. Let's see if we can put that in there too. It's a bad thing. We are uh, what we believe. We've seen for a fact is that it doesn't work. If it did work, we wouldn't have these recessions all the time. And so it's a socialist theory. Wants government to make the decision in policy. There it is. Let's see. When John Maynard Keynes' economic theory, known as Keynesian economics, they claim it is not directly advocating socialist revolution. It does promote a significant role for government to intervene in the economy. We don't want them to intervene in the economy. If they had the ability to intervene in the economy, then they would be working in the free market economy, making money for themselves instead of pretending that they're going to control the economy. Let's see. So, an economy which aligns with socialist principles. Let's see. There it is, right there. I like how they say that. It's not directly advocating socialist revolution. It does promote significant roles of government in intervention of an economy which aligns with socialist principles, and practically an ideal of using government for spending stimulant economic growth. Yeah, right. Yeah. And so that is the problem, is that the general population, minus the Republican Party here in the United States, is wow, look at that. They cut it off. I like that. Oh, wow. So, there we are. There it is. It does promote. There we go. Let's try that. Let's go like that. Go like that. I'm like, they're really blocking this. They won't let me put this on the chat line. How about that? That's wild. They will not let me put that on the chat line. Now, they're actually blocking it. The chat line won't even accept it. There we go. We'll just see if we can get that off of it. Wow. Talk about control. Let's see. Paste. Let's see if it'll allow it. There we go. Let's see. There we are. Is there such a thing as some socialist principles versus others? I mean, so far, all the socialist countries can't do anything against America. We're 350 million people, and and our socialists love Keynesian things, and that's why we have inflation. That's what Mr. Biden gave us. Worse since Jimmy Carter. You can't do socialism without hurting people. Socialism doesn't work. So, we are supply-siders. We believe in free markets and free people. Free markets, free people. Really? That's exact. Oh, well, what's that? Oh, didn't take it. Let's see if we can put that in there. Let's see. Arthur, who's still alive, Arthur Laffer. Supply side economics. In other words, more products, less inflation. There it is. And that generates growth. And that is really the whole story in the end. And that is free markets and free people. free markets and free people. Totally different compared to socialism, which is trying to tell us how to live our lives. There we are. And so that's what we are looking at this morning when we look at these prices on the bar charts when they're going up and down. And so we're moving away now from Maynard Keynes, again, economic socialist policies. And we're going to move back to Arthur Laffer's supply side economic free markets and free people, which was started by Ronald Reagan and Arthur Laffer. And Arthur Laffer's still alive, and I see him 3 or 4 times a week on some of the shows that follow free markets and free people. And so that is the big difference. And that's why Europe is not growing, and that's why the United States is growing. Even when our socialists try to disturb it and shut it down, it doesn't work because our Constitution is in full sync of supply side economics. It always has been. And every time the socialists try to stop it, they usually just create a recession. That's what it comes down to. Matter of fact, the Federal Reserve right now has been trying to. How did they fight the inflation? They raised interest rates from a historic move from a quarter point to, or no, I guess it was minus, all the way up to, from minus all the way up to 5.5% in like a 9-month period. It's a monster move. It's some of the most dramatic moves we've ever seen percentage-wise. And for a year and like 15 months total, 16 months, almost a year and a half, a year and a quarter, the chairman of the Federal Reserve, the head of what we call the Secretary of Treasurer, or in most countries they call them the finance minister, and the president, which most countries call prime minister, said no, there's no inflation, when in fact it went through the roof, exploded up and hurt our population. And that's what we look at here every day when we're looking at the bar chart and we're looking at the value of a currency versus another currency. We're looking to see what one currency is doing in interest rates, inflation, growth, productivity, innovation. It's like looking at a stock. Each country acts like a stock in a sense. And right now, that's where we stand. All right, let's take a look at the British pound and see who is outperforming who. And there, the British pound closed in that daily buy yesterday by the hair of its teeth, I guess you could say. And you can see today they're trying to pressure it again. It's playing with the sell side. It did that most of the day yesterday, but in the end closed down a little bit, but still in a buy. You can see the weekly is having that same issue as the euro against the dollar. Against the dollar. It's right there, number 31. You can see right there, 10 weeks in a sell and 5 days in a buy. So if you were long the cable and short the euro, which we follow also right here, you can see that it was a winner for the cable and a loser for the euro. Just like that, right there. And that's what the math has been telling us. And so there's 2 pairs trades you would want to play, like a euro British pound pairs trade, or Swiss, the dollar Swiss pairs trade, or there's many different pairs trades, and that's what you do as a currency trader, trying to pick the best of the best and stay, and short the worst of the worst. All right. Let's see. 3 positions. Long, short, or neutral. I like that. That's going to be the title today, too. All right. So from there, we slide over to the Swiss right there. You can see the Swiss moving up for the last 3 days on the bar chart. Staying inside its range from here to there. Oop, don't mean to move that range. because that's actually set on something. And so you can see here, the daily has been going up and the weekly is still going down. And when you look at it on the, just move it down a little bit right there, that's also 10 weeks in a weekly buy and 2 days in a daily buy. Now today is the third day. And at the same time, remember, this is a, right there, let's just put that there and make it a little bit bigger too. That's dollar Swiss, not Swiss dollar. So that automatically means that when it's going, we look at it Eurocentrically. So when the Swiss is going up, it's losing against the dollar. When it's going down, it's less Swiss to a dollar. And obviously, if you're living in Switzerland, you want less Swiss to trade for a dollar, not more. You don't want to have to give them 10 saltines. You want to give them 9. That's a better thing, isn't it? I think it is. All right. Traders, you're welcome to jump into this conversation. There are no wrong or right answers when it comes to, or dumb. There are no dumb or wrong or right questions when it comes to money and trading. There is only a long answer or a short answer. Yes. All right. And then from there, let's see, where are we at? That's the Swiss. Let's take a look at the yen. Somehow in my heart, I don't know about my economic theory, but in my heart, I want to believe that the yen will benefit from a good dollar, a strong dollar. Don't ask me why, but I think they will. I think it's got something to do with the way the command and control capitalistic society they have over there, which is, a lot like a corporation. That's why we used to call Japan Inc., like it's a corporation. It functions like a lot of downstreaming. A lot of companies own, like, if you're a car manufacturer, you own the parts company, but it's an independent stock separate from the car company manufacturing the parts, and they downstream. It's a term used in economics and economic theory, and they downstream enormously. So for many, many years, we used to refer to Japan as Japan Inc., like it was a corporation or LMT or limited, company. And you can see here, up on the spreadsheet, we've got where is it at? Right there. There's the dollar yen. We are 2 weeks in a sell and 6 days in a buy. So it's in that neutral stance at the moment. And you can see we were playing for a third week, moving into the buy. But today it's pushing up a little bit, so we remove that box. You see we've been in the daily buy for, 6 days going on a 7th day. So obviously it's rising. In other words, it's losing against the dollar. It's rising up. That's why it's in the buy, and it's not a good thing for them. It's a bad thing. When it's like the bond. When it's going down, it's the yen is gaining against the dollar, right? So you don't look at a chart and you go, okay, this thing is gaining, but it's going down. That's right. It's gaining against the dollar. That's why it's called the dollar-yen pairs trade, not the yen-dollar pairs trade. All righty. From there, we have about 9 minutes before Europe cuts its interest rates. So we'll see what's going on there. And at the same time, let's see. Where are we at here? Let's do this. From there, we'll go to the great experiment, the Turkish lira. See, that thing is just, it's being governed by a weak euro, I guess you could say, or a strong euro at any given time. And you can see that also is having a good time at the moment. It's the opposite side of the euro, where it's 11 weeks in a sell the euro against the dollar and losing. Obviously, right there, the Turkish lira is 11 weeks in a sell and gaining against the euro. So it's a weakness of the euro itself, and 2 days in a sell. So it's telling you that, it's going down, which is a very positive for the Turkish people. Very positive. I don't think it means much, unfortunately. I really wish it did mean more. But at this point, Turkey seems to be out of bullets when it comes to controlling their economic policies. It seems to be one big upside-down disaster. So, and then last but not least, we slide over to South Africa and see what's going on with them. And there it is right there, South African Rand. It has that downwardly slope that we keep on talking about. See a little bit more today. And that usually puts strength into the gold market since this is the largest producer of gold. Unfortunately, it's not at 2 Rand anymore to the dollar. It's at 17.5, and that's just political policy or government policy. That's what that is. Government policy creating that hyperinflation. All right, now let's put up gold. Right there. Gold. And there is the gold. You see Feb gold been moving up. Trying to put some strength on there. It's a third day in a buy, but look at it, it's down today, which is interesting. A lot of times when we see that, by the end of the day here in the States, we find gold higher. They went up after that 2750 area for the last 2 days, yesterday and today, and not far from all-time highs, only like 3% away. So that has been a big influencer, I guess you could say. And then we go to silver. And you can see here silver. Silver is feeling the same action. It made a new high and it's rolling over a little bit. Still trapped well underneath the 5-year high of 35. And you can see it's still in a weekly buy there. And I believe gold is too. Let's go back to the gold for a second. Yeah, gold is hanging in there on a weekly buy still. Trying to stay in there. Today is Thursday, right? So we're only a day away from seeing the end of the week, and that'll confirm everything. And when it breaks the manifold here, that standard deviation, what I like to call the nonlinear time manifold, that's the 2 mirror imaged yellow lines. That's usually a really high percentage that it's like a 99% chance of closing in a buy. We've seen it if it happens on a Monday. Sometimes it's about an 80% chance, but by Thursday it's like a 99% chance. And even now with it above it, it's still acting strong. As long as it stays up here, it'll close in that weekly buy. So then let's go to copper. There's copper. They're trying. I heard this morning that Mr. Trump has invited the leader of China, Mr. X, to the inauguration. They say it's the very first time that a foreign leader will be invited up on the stage to sit with the new president. So that's pretty cool. That's your classic Trump, the great negotiator. All right. And then last but not least, we look at platinum. There's the platinum. And you can see here with about 4 minutes to go, waiting for Europe to make their move. You see platinum is trying to move down. It's still at a 0.0. Oh, they just whooshed it into a minus 0.07. Just pushing it underneath with a red dot. At the same time, you can see it's still in that weekly sell, not like gold and silver. But copper and platinum are still hovering in the weekly sells. All right, so from there now we'll jump over to the energy sector. Let's take a look at where Brent is this morning. Or for some of you, it's this afternoon or this evening. Or enormously early morning to, say, Tokyo. No, I'm sorry, it's nighttime in Tokyo. There we are. And there is Brent. And let's put that up on the screen. And you can see there. See that strength in the daily algorithm there, and you can see the weekly algorithm flirting with the weekly sell. And you can see it's been a lot of in and out, in and out. They don't know what to do. I mean, there's a lot of, let's say, they like to call it kinetic activity. in, say, Syria and so forth. So it's kind of like, in other words, war, WAR. People are shooting at each other. And so we're just kind of sitting back and just watching this action and thinking, okay, we'll see how the stock market acts from this action. We'll see how the currency market acts from this action. Uh-huh. Snicks. Huh. How about that? Okay. Yeah, so all right. Now, there is Brent. You can see it's been trying to climb for the last 3 days with no problem up, but it's not really going too far up. It's not obviously challenging this stuff here. They're not going all the way up to there. At the same time, you can see we're flirting again with that weekly sell right there. So it's kind of stuck in that neutral state. It's like, all right, don't be short on a day-to-day basis, but this thing might just find a way to go down on a week-to-week basis. So it came in a buy and now it's heading into a sell. So it just shows you that uncertainty because of the energy factor that's so important to Earth. The population on it, let's put it that way. The population of Earth. Now, from there, we'll go take a look at West Texas Intermediate right here. And there's West Texas doing that same thing. Give it a refresh when it says we're sorry. Right there, you can see the same thing going on. There's 4 days of green dots. There's 3 days of confirmed algorithm. And we got our weekly pressing down right there again. So we got it all. We got the pressure of that right there. And at the same time, we have the pressure of that right there, going in opposite directions. Especially with the obviously the algorithm and the dots. We can watch these two against that all the time. So we watch the algorithms, we watch the dots, and we watch the weekly. They need to be in sync, and that's not a boy band. All right. From there, we shoot over to, we'll go to the product that they produce that basically feeds the world with resources that can be used to keep themselves alive by shortening travel thousands and thousands of miles into just a 2-hour event or 3-hour event or 4-hour event. That's the kerosene for the fuel of engines in the air. Airplanes, the diesel fuel for trucks, and obviously the last part of it is, oh, wait a minute, are we there? We're 1 minute away now. And then we are looking at the heating oil to keep houses warm when it drops below zero. Okay, here we go. Looks like to me, let's see. Did they drop the rate in Europe? I guess we should be seeing it. I'd imagine they dropped the interest rate in Europe. Let's see if we can find it up on Dukascopy's calendar. Not there. Not there. Let's see. Let's go to, where's the calendar? I know I have it in here somewhere. I think what I do is I do it on the other machine. I think that's what it is. So I go like that. We should be seeing it. Let's go like that. Let's go to the calendar. Here's the online economic calendar of Dukascopy. And let's see, today. I was told it was at 8:15. No, I'm confused. They're not reflecting it at all. 3-year bond. What's that? That's the 3-year bond auction and 5-year bond auction. Press conference monetary. Producer price index. We see that in the U.S. But I don't. Oh, ECB cuts rates by a quarter point. There it is. Why isn't it on the calendar? I don't understand that. That's today, right? Yeah. Did I have it listed as tomorrow? Do I have it wrong? But it just did. They just lowered ECB rates a quarter percentage point today. Euro current account. That's interesting. They don't have it on the calendar. That's so odd. They always are. They're very always, online news. Let's see what happens here. ECB is widely expected to. There it is, right there. Markets wait for further easing from ECB. Market spotlight has turned on European Central Bank's interest rate decision that would be known on Thursday morning. ECB is widely expected to erase a quarter point. The Swiss National Bank had earlier in the day cut its key policy rate by 50 bips, or 0.5. And that's how we're, following. Here's the live mode. Okay. Maybe I need to turn on the live mode for the economic calendar. Let's give this a spin. I'm a little surprised today. I don't understand that. And it's on the financial news side, the online news of Dukascopy. Okay. Anyhow, that is what it is. And so they have dropped the rates, and we've learned also that the Swiss did the same thing. So that's probably why we're seeing the Swiss. I guess we could do this. Doesn't seem that it's having a little effect on the U.S. stock market. Not a lot, really, but just a little. I see a little more firmness. See, there's not. You know what we should really look at? Let's look at the bonds. See how the bonds are acting. We saw that when we first started the webinar, the bond market was heading down. In other words, they're not happy about this cut. All that's doing is fueling inflation. But they have to keep up with the U.S. market, because next week, supposedly, the Fed will drop the quarter point, which, as far as I'm concerned, that'll be a full point they've dropped, which they're not supposed to do. As far as I'm concerned, they shouldn't have dropped it. Maybe a quarter point once. That would have been it. Not now. It'll look like it'll be 3/4 more than they should have dropped. Let's find the bond on the chart here. Right there. There's the 10-year again. You see there, it's towards the lows of the day. It's down still. It's just wrong. It's the only way to describe it. It's wrong. They're feeding, this Maynard Keynes economic theory is feeding inflation. That's all they're doing. Putting more cash out there when we have inflation. They need to change the policy and stop putting cash out there and increasing supply of product. And that's what the problem is. They won't do that. And you can see, let me switch you over to here. You'll see the bond live here. Look at that, now down at the lows of the day. And you can see it's flirting with the weekly sell right there. And this is where, again, Mr. Powell is showing his level of incompetency again. That's really what it comes down to. Matter of fact, with this type of thing, I have my doubts that Powell will even be the Fed chair going into 26 when he's up. When his term is up, he may end up resigning. He may. There may be a real hard push by the Congress to get him to resign, because at this point he's feeding inflation. Now remember, Democrats are not going to like that, because they like Maynard Keynes' socialist economics. And so, they want you to believe taxes are good. Taxes are not bad. And in supply side economics, taxes are bad. And we try to keep them as low, if not gone. And that's the real fight we have here in America, is the socialism of Europe from the I can say this, our founder, one of our earliest religious freedom people, William Bradford, who came here in 1618, running away from England and prosecution, tried socialism, and it did not work. And they started dying. They were dying from it. Starving to death. And a few years later, Smith and policies of free markets and free people, like in the Old Testament, and the next thing you know, the country took off and exploded, and we're the dominant country on the planet now because we believe in free markets, free people, and supply-side economics. And when the socialists got more involved in the 1880s, they've been battling to move into the socialist side again. And you can see we get hurt. People get hurt from socialism. Hundreds of millions of people have been killed over it by socialists killing people. All right, so from there, where are we at this point? It's 23. We have a number coming out in 6.5 minutes, so we're going to stay around for that just to show you what the PPI is. And let's put Dukascopy's economic calendar up there again. You can see here we're pretty much at the low of the day. There it is right there. Let's put that up there again, the economic calendar. And you can see here today at 8:30 we have Canadian building permits, and at the same time at 8:30 we have producer price index, ex food and energy, and then we have year over year, and they're looking for a 0.2 increase. In other words, more inflation. And let's see, what did it previously was 2.4. They're looking for 2.6 right there. So 0.2 like yesterday when we saw CPI go up. Just more signs of inflation. The logic in real markets, healthy markets, is not to lower interest rates. But right now we still have 38 days of the socialists in power, and so they are lowering interest rates. And what we'll do is, and when Powell has to start raising interest rates again, that's probably where he will start to feel the reason why he needs to resign, because he's been wrong so many times now. Indeed, indeed. All right, from there, let's see. Let's just do that news thing again. I like that. Online news right there. There's it right there. You can see it. 10-year yield rising. Market premium reflects growing reflation fears. That's the problem. He's not supposed to be cutting it. All right. From there, we jump over. Where are we going over now? Let's see. We were looking at heating oil. Let's go to natural gas. Natural gas has jumped the last couple of days. They're pushing on it. You see here some strength again. Now today they're trying to push it down a little bit, but it's in a buy. But at the same time, that's on the daily, it's in the buy for 2 days now. And at the same time, we are still in weekly sells going on the second week. So it's a neutral stance again. From there, we jump over to, let's go to Spain. Check out the energy company. Boy, they've been selling that stock down the last couple of days. And we were like, they pounced on that thing from like 13.20 down to 12.50. It's a strong drop for the price of the product itself. ENG right there, MC, and it's being pushed down again, down and down and down. Pressure's on. 4 days in a sell. It's in a weekly sell. This is good signs for Europa, because that means that prices in energy are trying to go down, which means when you try to not freeze to death, it's cheaper to do. sometimes we need to kind of like explain it, in many ways. Like, hey, this is a bad idea. Let's make it clear that it's a bad idea, and we think it's a bad idea. So, it's just all the same. The same. And what I'm doing now is I'm drifting over to start putting in our title into the Dukascopy Academy. Okay. Title. Deck 12. And what was that title? Long, short, or neutral? We are looking at 3 positions: long, short, and neutral. Long, short, and neutral. I like the idea that I write this stuff up on the chat line, because this way we can definitely go up and look and see where our heads were at. There we are. And so there's the title today. Cool. Alrighty. Alright. We got about a minute and a half. Where are we at on this? We are looking at 1 minute and 24 seconds. So we'll see what that does. Let's go into a... let's see if we'll show you what our stock market will do with the data. There it is. And here is... right there. There is the S&P 500. You can see it's been rising. It's been gaining since about 25 minutes ago. 24 minutes ago, it's been rising. It went from the 77 area up to the 83 area, which is only 6 full handles. Nothing major, but definitely a move up, that's for sure. And we are now just 30 seconds away from the action, and we'll show it to you, and then we're going to get out of here. So, traders, I'm going to sing my song, and then you'll see the action of what the economic data is showing us. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, catch you all tomorrow. Tomorrow is TGIF. It's the end of the week. So we're looking good. Golly, Miss Molly, we're happy as all get out. There it goes. There's the number. There they fly. Watch them go. See it jumping up. Oh, no, you're not seeing it. Let's get you there. There we are. See, it just jumped up from the news right there. It went from 81 to 86. Same value as from here to there, basically. And now they're digesting it. And the data says, what's the data say? Let's see. Let's just go over to Dukascopy's online news and give it a refresh. Still reflecting the 10-year. So, we'll catch you all tomorrow, same time, same channel, and it'll be the end of the week. And ta-ta for now. Up 4/10. What was Dukascopy looking for? 3/10 or 2? No, 2/10. What are they looking for? I think Dukascopy had it right. There, they were looking for 3/10. We're up 4/10. It's even a little bit worse. Welcome to the new inflation. Thank you, Mr. Biden, a second time before you leave. Isn't that wonderful? Ta-ta.